guys. I just want to do a series on some of the funds that are, or individual stocks that are quite popular at the moment in terms of what people want to write cover calls on. I know there's a lot of interest in some of these, so I just want to start doing a series, maybe covering some of these off. The first one I kind of want to touch on is MicroStrategy, and I think it's quite pertinent now that we have two funds that are kind of covering, MicroStrategy in the UK and Europe. We've got an ETF doing it, and we've got just recently Income Shares have released their version of it. But I do want to talk about the underlying a little bit because I think there's a lot of confusion potentially around MicroStrategy. And so I just kind of want to go through it, talk about the risks, talk about the rewards, and all the things that are linked around it. So it originally started as a software engine. Its original business was providing enterprise analytics and cloud services. In about 2024, that was around $463 million of revenue. But obviously since then, they've acquired a large amount of Bitcoin, as we all know. So their new core strategy is using Bitcoin as their primary reserve asset. So they currently have, almost 600K worth of Bitcoin, which is astounding because it's 63.8 billion US dollars. And when we look at what this equates to in terms of the share of total Bitcoin supply, it's, they've got 2.6% of all Bitcoin that will ever exist, which is crazy, making it the largest publicly traded corporate holder of Bitcoin right now. In terms of how they're scaling the Bitcoin, they're currently doing it through a kind of a flywheel mechanism where they're raising capital, issuing debt and equity, potentially shares outstanding as well, to acquire the Bitcoin, and then they're deploying those proceeds, and then the stock premium and the market speculation is obviously helping them kind of balloon and grow. So this kind of self-reinforcing loop, using the stock premiums to fund more purchases, amplifying the exposure, but also creates a dependency on this continuous investor appetite. So the question in my mind is, if that investor appetite was to cool off, what are the risks that are associated, with that? It's kind of a bit of a tale of two financials in a way, because obviously they do have a small amount of revenue that's coming from the core business. So the Q1 2025 results was around 111 million. But the reality is that they're currently showing a net loss of 4.2 billion, and that's primarily because of the way the reporting works, from Bitcoin. So it's just the accounting rules for digital assets creates that imbalance. When we look at the company's financials, the company's balance sheet is 99% weighted towards digital assets, aka Bitcoin, in that highly leveraged Bitcoin vault, in effect. Long-term debt has reached 8.14 billion as of Q1 2025, up from 7.19 billion in Q4 2024. So that is a massive jump there in terms of the actual amount of debt. If we look at it from a valuation perspective, we would normally look at something called price to earnings ratio, which is the common valuation metric that kind of compares a company's share price to its earnings per share. It kind of helps investors determine if a stock is overvalued or undervalued relative to its earnings. However, MicroStrategy has reported significant net losses of negative 4.2 billion in Q1 2025 due to the Bitcoin accounting rules. So when earnings are negative, the P ratio is basically meaningless. We can't rely on it as a metric. What we can do, however, instead for MicroStrategy, is look at the enterprise value to sales ratio, and it's more relevant. So MSTR's EV sales stands at 181x, substantially higher than the industry average of 5.63x. So this kind of indicates a significant premium paid by investors, kind of reflecting that market focus on its Bitcoin holdings rather than its software revenue. Okay. The next question then comes to mind is, how is MicroStrategy going to service this debt? And so, the primary source is still new capital that it raises. So it's kind of got, insurance on convertible notes and equity, common preferred stock. It's also got, the market premium and the Bitcoin price as well. And then it's got the debt servicing and Bitcoin acquisition as part of all of this. Now, the company stated in the policy that it does not plan to sell any of its Bitcoin to service debt, and it kind of emphasizes its reliance on external financing and ongoing acquisition. The acquisition flywheel I kind of showed you at the start to manage its financial obligations. Now, the only risk with that is obviously that they are still able to get people to believe in them and the Bitcoin journey. And it obviously relies on external financing from other areas that also still believe in that as well. So there's a bit of a risk factor there to bear in mind. In terms of the actual stock itself, if you look at the 3-year performance of MSTR or strategy, versus Bitcoin versus the tech sector, we can kind of see that actually MSCR stock has vastly outperformed both Bitcoin and the broader tech market. And I'm using XYLK there at 69% as my broader tech market measure. And we can see MSTR has done 1,524% in that same period of time, sort of demonstrating the amplifying effect of its leverage strategy in effect. So it is a Bitcoin leverage play. In terms of the premium to net asset value and dilution, investors are paying a significant premium for MSTR shares right now compared to the underlying value of its Bitcoin and software business. As of March 2025, it's almost 112%. So it's a hell of a lot, because the company's aggressive capital raising, including that 6.6 billion in equity year to date that I talked about, have kind of led them to increase their shares outstanding, resulting in further dilution for existing shareholders. But this is part of that acquisition flywheel to fund more Bitcoin purchases. So the next question then comes is, what do the experts in the room believe, the analysts out there? So there is still a case for a strong buy from the analysts, and we can see the number of analysts is 11 who are kind of rating it a strong buy. From a buy perspective, there's only one in that pot, and one is a strong sell. So the consensus is overwhelmingly bullish still, with an average price of 534 from a recent price of 373. So this still suggests a 43% upside, which is incredible considering you look at the other value metrics that we looked at earlier, and it kind of shows that there might be a disconnect here between what the valuation is and what the markets believe. And this is the speculative part of the markets. Now, the bull case is it's a unique leverage play on Bitcoin with an asymmetric upside, a visionary strategy providing institutional access to crypto. Because what you've got to bear in mind is some people don't have direct access to Bitcoin, whether that be regulatory, whether that be because of certain circumstances. So this is giving them that exposure through an actual organization. Obviously, the bear case is it's significantly inflated valuation that I just talked about, with extreme leverage and quite a large amount of what feels like unsustainable debt, almost like a Ponzi-like model dependent on new capital. Now, I use that word loosely because it's only that if Bitcoin doesn't play out. So this is why I think anyone that's investing in MicroStrategy really needs to be a Bitcoin believer. And I would argue you don't even need to be a believer in MicroStrategy's other arm of its business, the one that started off doing the software and the analytics, because it's swung so far the other way now that for me it's about the people that are bullish on Bitcoin. Okay, so another thing that's kind of quite important to think about right now is the fact that MicroStrategy could make it into the S&P 500. And, from a market cap perspective, being over 100 billion, far exceeding that, that requirement, of 22.7 billion. So there isn't a problem there. The main hurdle, requires a cumulative positive earnings over the past 4 quarters. And analyst Jeff Walton estimates a 91% chance of S&P 500 qualification in Q2 if Bitcoin remains above $95,240. So that's quite a key requirement. And then obviously the final one is a committee discretion. So the final decision rests with the S&P committee. Now, whether they choose to, exclude, MicroStrategy or strategy, I think is probably unlikely, but it could happen. So the inclusion would obviously trigger massive inflows from index funds, kind of boosting that demand and that credibility. But again, it hinges on Bitcoin's price being high enough to satisfy that accounting profitability rules. And obviously it will play quite nicely into that strategy that they've got around the flywheel, and it will continue to support that. So the investor's dilemma from a risk and a reward perspective. Obviously the rewards are amplified Bitcoin exposure, outsized returns during Bitcoin bull runs during that, using that leverage. And I've done a separate video on the cycle of Bitcoin. Obviously institutional vehicle, so it's a regulated, publicly traded way for funds to gain access to Bitcoin. The S&P 500 catalyst, which is very close to being closed in on, will be a massive buying force from index funds globally. And obviously the other very final one, which I think is very pertinent to what these other funds are doing that we talked about at the start of the video, is writing covered calls on this, taking some of the volatility that's going on and, taking some of that risk off the table. Because with covered calls, you're taking some of that protection by getting the income, on any potential downside. Obviously, what are the risks? The risks obviously are part of that extreme volatility, right? The price swings, and that severe leverage on Bitcoin, and that may be too much for certain people to handle. Obviously, we've talked around the leverage and the debt, and there is substantial debt load, creating that solvency risk, especially in a downturn. And for me, the biggest risk is that they're not using that Bitcoin itself to pay off any of that debt. So they're kind of relying on other means to service that debt. The liquidity paradox, obviously massive asset value, but cash poor for operations and debt services. So again, that plays into, that risk. And then finally, the premium collapse. So the stock could fall sharply if the high premium to NAV erodes, independent of Bitcoin's price, which is always a risk. So there's lots of, positives to take, and there are also some negatives to look at from a risk and reward perspective. But for me, it's the primary driver is if you are bullish on Bitcoin and you have no other way to access Bitcoin, this is a great vehicle. I think it will be a great vehicle for covered call income strategies until kind of the market kind of decides what crypto and Bitcoin's going to sit in and what kind of investment strategies fold around it. So there you go, guys. I hope you find this video useful, and I'll catch you on the next one.